Part 6. Surplus Fund and Liquidity Management. Question 1. Which of the following function is the least likely to be carried out by a Treasury departure? The answer is preparing the corporate budget and business plan. Treasury departure is highly unlikely to be involved in preparing the corporate budget and business plan. That is the function of Finance and Management Accounting Department.
Part 6 of question 2. Harpole finds it has a short-term cash surplus of 5,000 for which it has no use at the moment, but will require it to pay off a loan in 3 months' time. Which two of the following options for the temporary investment would you not recommend? The answer is C. Buy some shares on the stock market, and D. Lend it to a business customer at an interest rate of 5% above base rate. This is because buying shares on the stock market has liquidity but at high risk. The shares may be sold for less than the original investment, leaving Harpo unable to repay the loan. Second, lending it to a customer has both risk and liquidity problems. There's no guarantee the loan will be repaid either on time or at all.
Question number 3. The correct answer is that the interest rate is generally higher for longer-term financial assets due to, first, risk of borrower default. Second, liquidity preference of investors need to be compensated because to compensate the investor for loss of liquidity from longer-term investment. And third, uncertainty of a future economic prospect. The longer the term of the investment, the less certainty there is over the economic state during the full term.
Question number 4. 4 benefits of holding cash are: A. Ability to take advantage of speculative opportunities. B. Interest saved on paying for an overdraft. C. Being able to quickly and easily pay for unforeseen liabilities. D. Interest earned on long-term deposits. E. Ability to pay supplies on time. The correct answers are interest saved on an overdraft, paying supplies on time, paying for unforeseen liabilities, and taking advantage of speculative opportunities are all benefits of holding cash. If a company holds cash, they will not benefit from interest earned on long-term deposits as the cash is held on short-term deposit or physically on the premises.
Question 5. In devising a cash management policy to deal with cash surpluses, which three of the following may be considered as ways to return money to the owners of the business? The answers are A. Increasing annual dividends, D. Special dividend payment, and E. Buyback of shares from shareholders. Directors are not necessarily the owners of a business. They manage it on behalf of shareholders. Increasing directors' bonuses will not return cash to the owners. Similarly, a lease and buyback scheme for property will not return cash to shareholders. Question 6. Which four of the following would require a company to keep cash available for transaction purpose? The question asks for 4 answers. The answer is paying suppliers, regular maintenance charges for the company's vehicle, employees' wages, dividends to shareholders. These 4 will therefore be held for transaction purpose.
Question 7. Which of the following statement is or are correct? Number 1. Knowing the size of their usable cash balances can help companies to increase their profits. Number 2. Companies should be able to ascertain the size of their usable cash balances from their cash book. The answer is B. Only statement 1 is correct. Because if a company treasurer knows what their usable cash balances are at any time, together with details of uncleared items will be cleared the next day, the company can increase their profit by investing surplus of cash overnight or for longer duration. Statement 2 is incorrect because usable cash balances are cash balance after payments and receipts have been cleared.
Question number 8. The correct answer is unsystematic risk because it can be diversified away, and this risk is specific to sectors, companies, or projects.
Question number 9. One of the 3 main criteria in considering the investment of surplus cash is liquidity. Which two of the following investments are likely to be classified as non-liquid? A. Shares in a quoted company. B. Loan notes in listed companies. C. Sterling certificates of deposit. D. Government bonds. E. Deposit a 90-day building society notice account. The correct answers are shares in a quoted company and deposit in a 90-day building society notice account. Sterling certificates of deposits, government bonds, and listed company loan notes all have a ready market in which they can be sold and the cash realized within a time period of 2 weeks or so.
Question 10. The formula for Baumol's model is Q equal to square root 2 Fs divided by I. What does the term S stand for? The answer is C. Amount of cash to be used in each time period.
Question 11. Which of the following factors is the least important when choosing investment to include in a portfolio? The answer is geographical location. This will only be relevant if it impacts on one of the other primary factors, such as security or the expected level of returns.
Question 12. A multinational company might have a central treasury department for the entire group. Which three of the following might be given to the department? The answer is A. Lending funds to operating division in the group. D. Cash management for the group as a whole. And E. Hedging exposure to currency and interest rate risk of the group as a whole. Central Treasury Department will usually manage the cash flow of the group as a whole and will borrow centrally. They also relent the funds to operating units. It will also be responsible for the management of currency and interest rate risk for the group. The management task of making investment decisions and preparing the master budget will be carried out by the management of operating units, that is, assistant of Central Finance Department and the Finance Director, or by the Board of Directors.
15. Better short-term investment opportunities will be improved with centralization because there will be larger column of cash available for investment.
Question number 14. One of the three main criteria in considering the investment of surplus cash is risk. Which three of the following investments are likely to be classified as low risk? A. Government gilt-edged bonds. B. Ordinary shares in a listed company. C. Debentures in blue-chip listed companies. D. Junk bonds. E. Deposit in a building society account. The correct answers are government gilt-edged bonds, deposit in a building society account, and debentures in blue-chip listed companies. Investment in government bonds is very low risk with fixed interest paid and capital security assured. Similarly, deposit with building societies and investments in blue-chip company debentures yield fixed returns and have good capital security, although such organizations can run into liquidity problems. It is quite rare that they will be to the extent of affecting the safety of the investments, particularly where they are secured.
Question 15. The cash flow forecast prepared by Heavy Metal suggests that the overdraft limit will be exceeded during the second month of the forecast period due to the timing of an asset purchase. However, by the end of the quarter of the overdraft should be back to a level similar to that at the start of the period. Which of the following courses of action would you recommend to overcome this problem? The answer is A. Negotiate with the bank for a short-term loan to cover the deficit. Since the cash flow problems appear to be temporary in nature, it is appropriate to use a short-term solution.
Question 16. What is unsystematic risk? The risk that can be eliminated by diversification.
Part 7. Accounting for cash and cash management. Question 1. Reminded that this question has a correction. Jack has 150 on 1st January. If the RPI on the 1st January was 250 and on 31st December is 230, what is the amount of money that Jack will need at the 31st December to maintain his spending power? To calculate this question, we need to know what is RPI. RPI means Retail Price Index. The formula for RPI is price end of the period divided by price start of the period times with value. So the calculations For this question are 230 divided by 250 times with 150, and the answer is 138.
Question number 2. In June, the payment will be for material purchases in March. This will relate to sales in September, which are expected to be 180,000. So budgeted cash payment is 90,000, which is 50% of 180,000 equal to 90,000.
Question number 3. A retail business has annual revenue of $0.75 million and a gross profit margin of 30%. It is currently experiencing short-term cash flow difficulties and intends to delay payments to its suppliers by 1 month. To the nearest dollar, calculate the amount by which the cash balance will benefit in the short term from this change in policy, assuming revenue is spread evenly over the year and inventory levels remain constant throughout. In this question, gross profit margin is given as 30%, so the cost of sales is 70%. Firstly, we need to find annual cost of sales. Annual cost of sales equals to cost of sales times with annual revenue. So 70% times with $0.75 million equals to $525,000. As inventories remain constant, this is also the annual purchase cost, which is spread evenly over the year. Thus, 1 month's purchases equals to $525,000 divided by 12 months equals to $43,750. This is the value of 1 month's extra trade credit, i.e., the cash benefit to be derived from delaying payment by 1 month.
Question 4. Which one of the following should be used when determining which year to choose as a base year for a revenue index? The answer is D. The year chosen should be representative of the other years. The year chosen as base year should be representative of a normal year. This means should not be abnormally high or low. Profitability is irrelevant when determining a revenue index. The business cycle or most recent year are also irrelevant to the decision.
Question 5. Fenton's projected revenue for 2000X6 is $598,000. It is forecast that 20% of revenue will occur in January, and the rest will be equally separate among the remaining 11 months. All sales are one credit. Customers' accounts are settled 50% in the month of sale, 45% in the following month, and 5% are written off as a bad debt after 2 months. What are the budgeted cash collection for March? The question stated the revenue for 2000X6 is $598,000. So, firstly, we need to find the revenue for the 3 months of sale, which is January, February, and March, because the question asks for the budgeted cash collection for March. For January, we will take 20% times $598,000, and we will get the answer $119,600. For the rest of the remaining month, we will take 80% times $598,000 and divide it by 11. And the answer will be $43,491 per month. As the question stated, customer accounts are settled 50% in the month of sale, which is for the March, 45% in the following month, which is for February, and 5% are written off as bad debt after 2 months, which is for January. So, the budgeted cash collection for March is 50% times $43,491 plus 45% times $43,491. And we will get the answer $41,316.
Question 6. The sales manager for Fables would like to set up revenue index using the year 2000X1 as the base year. If revenue in 2000X1 was 120,000, what is the index in 2000X6 when the revenue is 150,000? To calculate the base year index, the formula is current year divided by the base year times with 100. So, the calculation are 150,000 divided by 120,000 times with 100, and we got the CPI, Consumer Price Index, is 125.
Question number 7. The answer is 69,600 because Benji will pay for March purchases in May. Second, in January, he will purchase inventories to cover sales for January until April, so that he will have inventories covering February until April's sales at the end of the month. Third, in February, he will top up inventories by those required for May's sales. In March, he will top up inventories by those required for June's sales.
Question number 8. The management accountant is preparing the master budget for her retail firm. The following information has been supplied. Revenue $300,000, opening inventory $40,000, closing inventory $60,000, markup 25%. What amount should be budgeted for purchases? Firstly, we need to find cost of sales. In this question, markup and revenues given as 25% and $300,000. Cost of sales equals to 100 divided by 125 times with $300,000 equals to $240,000. Next, we need to find purchases. Cost of sales equals to opening inventory plus purchases minus closing inventory. Therefore, purchases equals to $260,000.
Question 9. Raybank has the following cash budget for the next 6 months. So, here is a statement of cash budget from January to June. Raybank only has an overdraft facility of $15,000. It has been proposed to reschedule the cash flows by delaying payment of 50% of the supplier payments in each of the first 5 months by 1 month. What will now be the maximum overdraft reach? The answer is the maximum overdraft reach is $13,000.
Question 10. In what circumstances would sensitivity analysis be a useful tool? The answer is when assessing the impact of a 1-month labor strike. Sensitivity analysis is used to test the responsiveness of profitability or cash flow to a change in a budget variable. It could therefore be used to assess the impact on profitability of a month-long labor strike.
Question 11. A company is preparing the budget for a product and the following data have been provided. Closing inventory in each month must be 40% of the next month's sale. Suppliers are paid in the month following purchase. The standard cost of material is $4 per unit. What is the budgeted payment to supplier in month 3? To calculate this question, sales in month 1 is 2,000, in month 2 also 2,000, in month 3 is 2,500, and month 4 is 2,800. Closing inventory is 40% of sales in units. Closing inventory for month 1 is 800. Closing inventory for month 1 is an opening inventory for month 2. Closing inventory for month 1 is 1,000. Is an opening inventory for month 3. For month 3, closing inventory is 1,120. Is an opening inventory for month 4. Opening inventory for month 1 is also 800. To calculate purchase, closing inventory we minus with opening inventory plus sales equals to purchase. So, to get the payment to supplier in month 3, we need to calculate the purchase in month 2. 1,000 minus with 800 plus 2,000. The answer is 2,200. And then we times with $4 of standard cost. The answer is $8,800.
Question number 12. The budgeted cash receipt from customer in March is 55,080.
Question number 13. The finance director of Swift Sure, a national road haulage company serving small and medium-sized businesses, wishes to reduce the float. Which of the following courses of action might be appropriate? A. Ensure that all checks are issued promptly. B. Ensure that all checks received are banked on the same day. C. Instruct administration staff to collect checks from all customers. D. Establish a banker's automated clearing services payment system. The correct answer is ensure that all checks received are banked on the same day. Ensuring checks are banked on the same day will involve speeding up office procedures so as to minimize lodgement delay and therefore the level of the float.
Question 14. Which of the following is considered the main reasons for not using index numbers in cash budgeting and forecasting? The answer is C. The preparer is only interested in exact monetary prices. Those preparing cash budget and forecast are only interested in the exact monetary amounts due to be received or paid within a period. The exact figures may differ from an index figure for a number of reasons. Index numbers can still be used to predict future cash flows into the long term.
Question 15. The following information is available for products X in June 2000X6. Price $2.50. Quantity sold 150 units. In August 2000X6, the following information become available for products X. Price $3. Quantity sold 175 units. If June 2000X6 is the base period, what is the price index for products X in August 2000X6? First of all, we need to find the index for the basis period, which is June 2000X6. Before we can find the index, we have to find the price relative and weighting first. The calculation of price relative and weighting are shown in the picture. Based on the picture, price relative is 100 and weighting is 375. By multiply these two, we will get the index 37,500. After that, we need to find the index for August 2000X6. Like before, we need to find the price relative and weighting first. The price relative and weighting calculation are shown in the picture. Price relative is 120, weighting is 525. By multiply these two, we will get the index 63,000. After that, we can find the August price index by dividing 63,000 divided by 37,500 times 100. And we will get the answer 168.
Part 9. Relevant Cost. Question 1. Cooper Co. is considering accepting 1-year contract which will require 5 skilled employees. The 5 skilled employees could be recruited on a 1-year contract at a cost of $40,000 per employee. The employees would be survived by an existing manager who earns $65,000 per annum. It is expected that supervision of the contract will take 12% of the manager's time. Instead of recruiting new employees, the manager could retrain 5 existing employees who currently earn $25,000 each per year. The training cost is $30,000 in total. If these employees were used, they would need to be replaced at a total of $140,000. What is the relevant labor cost of the contract? To calculate this question, the cost of recruiting new employees is that we take 5 skilled labor times with $40,000 equals to $200,000. We didn't take $65,000 as a paid to the manager because the company paid salary to the manager. salary is a fixed cost, thus it is not relevant cost. Then the cost of retraining is that we take $30,000 plus with $140,000 equals to $170,000. We take the cost of retraining as a relevant cost because it is the lowest than recruiting new employees. Relevant cost is to minimize the cost for decision making.
Question number 2. Avoidable costs, opportunity costs, and differential costs will all change as a result of the decision and are therefore relevant.
Question number 3. Which of the following costs may be relevant when considering undertaking a new project? 1. Incremental costs. 2. Committed costs. 3. Fixed overhead allocated to the project. The correct answer is 1. Incremental costs.
Question 4. Which one of the following statements about decision making is false? The answer is B. A sunk cost is a relevant cost. A sunk cost is expenditure which has already incurred in the past. Sunk cost is irrelevant because it does not affect the future cash flow of a business.
Questions 5. Litton Co. has been asked to tender for one-off contract to build a machine. The costs involved are detailed below. Material A is in inventory. It cost $5,000 originally and it is used continually by the company. The current purchase price is $6,500. Material B is in inventory. This was left over from another job and is unlikely to be used otherwise. It originally cost $2,800. It can currently be bought for $3,000 and could be sold net of delivery costs for $2,600. Skilled labor is in short supply and will have to be diverted from other production, with an estimated loss of contribution of $7,300. The direct cost of the 500-hour skilled labor needed for the contract would be $4,900. Unskilled labor is plentiful and the 300 hours needed could be found without affecting other production due to spare capacity. Unskilled labor costs are $4 per hour and all workers are paid for a 40-hour week. The overhead absorption rate is $2 per labor hour. No additional overhead will be incurred as a result of accepting this contract. What is the minimum price that Litton Co. should quote for this contract? We didn't take the cost of $5,000 in material A because it is a sunk cost. Sunk cost is an irrelevant cost. Material B, we will take the cost of $2,600 because it is a sale proceed. The cost of $3,000 is irrelevant because it is current purchase price and the inventory is unlikely to be used otherwise. And the cost of $2,800 is a sunk cost, so it is irrelevant. For the skilled labor, estimated loss of contribution $7,300 is an opportunity cost, and the cost of $4,900 is a variable cost, so this too is a relevant cost. Unskilled labor is irrelevant because the labor is having an idle time. Overhead absorption rate is also an irrelevant cost. So the total minimum price is $21,300.
Question 6. Only relevant costs need to be considered in decision-making situation. Which of the following are relevant costs? The answer is B, 1 and 2 only. That is differential costs and future costs. Common costs and unavoidable costs will be incurred regardless of any decision taken.
Question number 7. Relevant cost is $14,391. The material is in regular use, so any that is bought in excess of current requirements will be used elsewhere in the company. Therefore, the latest required and the current market price are the only variables that need to be considered when calculating the relevant cost of material K.
Question number 8. In order to utilize some spare capacity, Super Duper Co. is preparing a quotation for a special order which will require 130 square meters of material P. The company only has 60 square meters of material in inventory, which originally cost $30 per square meter. The material is used in the production of the company's main product, the Super Shed. Each unit of the supershed uses 3 square meters of P, and based on an input value of $30 per square meter of P, each unit of supershed yields a contribution of $54. The resale value of P is $32 per square meter, while its present replacement price is $39 per square meter. Material P is readily available. What is the relevant cost of the 130 square meter of material P to be included in the quotation? The correct answer is $5,070. The relevant cost of material P is its current replacement cost because it is used frequently by Super Duper Co. equals to 130 square meter of material P times with $39 per square meter.
Question 9. Brewed Company is considering the production of a limited number of C. One of the raw materials needed to produce C is also regularly used in the production of another product, the X. Details of this material are given below. Original cost $12 per kg. Resale value $14 per kg. Current purchase price $15 per kg. There are currently 580 kg of the material in inventory, and 220 kg are needed for the production of C. What is the total relevant cost of the material for the costing of the C production run? The answer is relevant cost is $3,300. 220 kg times with $15 equal to $3,300. $12 is ignored because original cost is sunk cost, thus it is irrelevant. The resale value is also irrelevant. The materials used regularly and an inventory, thus the materials should use current purchase price of $15.
Question 10. Alan Castle is a sole practitioner. He has recently been asked to provide 1 day's training for a local charity. He has provisionally agreed the date and accepted their daily rate of $1,500. On checking his diary, however, Alan discovered that he has planned to meet with a client, Miss Chan, on the provisional date. At the meeting, Alan is due to collect $2,000 outstanding from the most recent update of Miss Chan's company. If Alan does agree to accept the date of the training course, he will have to cancel the meeting with Miss Chan. So the question is, what type of cost does the $2,000 represent? The answer is a non-relevant cost. The $2,000 which is due to be collected is not material in Alan's decision to cancel his meeting, as the $2,000 will still be collectible.
Question 11. A customer has requested a quotation for job number 3428. This job will require a quantity of material N. Sufficient material N is in inventories held as a result of previous overbuying at a price of $2 per kg. It will cost $35.70 per kg to replace the material N, but if it is not used on this contract, it will be sold back to the original supplier for $34.25 per kg. The cost of transporting back the material to the supplier is 30 cents per kg, but it will be borne by the supplier. What is the relevant cost per kg of the material
Part 7. Accounting for cash and cash management.
To calculate the relevant cost, material N is already excessive in the inventory due to previous overbuying. If material N is still used in the inventory, $35.70 is the relevant cost, but material N is not used in the project. So, the relevant cost is $34.25. 30 cents is borne by the supplier.
Question number 12. Loss in value over the production life of the beta 25,000, contribution per unit of alpha 46, variable cost per unit of using the machine 28. Machine time is obviously a scarce resource since producing the beta would mean that alpha could not be produced. Second, The relevant costs are therefore the contribution foregone of 48 per unit and the machine running cost of 28 per unit. Third, as the production of beta reduces the value of the machine to a greater extent than the production of alpha, the additional cost of 25,000 is also relevant. Depreciation and absorbed maintenance costs are not relevant.
Question number 13. Clamsco have 290 liters of yellow paint in inventory from a previous job. This paint is used regularly by Clamsco. The original cost of the paint was $6 per liter. Although identical paint is currently being sold by the same suppliers at $4.99 per liter, local painters were only prepared to pay $380 for the entire inventory. The paint can be used on a new job that Clamsco is about to start. What is the relevant cost of the paint for the purposes of this new job? The correct answer is $1,447. The current replacement cost is $4.99 per liter. The paint is used regularly by the company and so the volume of paint used will need to be replaced.
Question 14. In the context of decision making, only relevant costs should be considered. Which of the following statements about relevant costs are true? The answers are A. Relevant costs are incremental costs. B. Relevant costs are opportunity costs. And D. Relevant costs are cash flows. Relevant cost is a cost that only relates to a specific management decision and which will change in the future as a result of that decision.